Most crypto investors don't get wrecked at the tops or the micro bottoms. They get wrecked before the real moves even start. It's when we're in those chop zones. They lose capital in that chop. They chase those fake breakouts and they force too much yield way too early in the market cycle as far as their DeFi positions. They get bored, they get impatient, they get overexposed and over leveraged with their trades. And then when Bitcoin finally breaks structure, the liquidity comes back and retail goes nuts. They're either out of the position, over leveraged, emotionally cooked, or have already cashed out. And that is what we are going to talk about today. And to be quite honest, my main thesis is simple. Most people here don't lose out because they missed the move. They lose out because they cannot survive the waiting phase. I have been guilty of this one myself, and they lose because crypto doesn't just test your ability to pick winners, it tests your ability to stay liquid, patient, avoid the leverage traps, manage your positions, and keep learning and building when nothing exciting is happening in the market. And to be honest, a lot of people are probably not going to watch this video, but they should, because everyone needs to understand why they want that breakout candle and what to do about FOMO. Nobody wants the boring preparation phase, but boring is where your edge is built, and boring is how you get all the gains. So honestly, as I was saying, I've made this mistake so many times before. I've chased the setups too early. I've rotated way too much, and I have forced yield when the market structure wasn't there yet. I've watched positions look great on paper and then realized the timing, the range, or the token exposure wasn't the real problem. That is why I came back to a process, because in crypto, being early is not the same as being right. Sometimes being early means you just get chopped up longer. You might even lose more. So once you get chopped up long enough, you start making emotional decisions. That's where the market gets you. Breakouts do not just take your money, they tend to also take your confidence. You buy the breakout reverses, you stop out, then it pumps again. You chase it again. It rejects again. After a few rounds of that, you're not trading the chart anymore. You're just trading your own frustration. That's why I don't really care about one green candle itself. What I want to truly know is this: did Bitcoin reclaim its structure? Did volume confirm it? Well, let's look at that. Number one, we're still very, very, very bearish. Look at this. Did volume confirm it? No. Volume has actually been down over the last week. Not a good fact to understand when we're pushing into resistance. Is Ethereum showing strength? Nope. Are altcoins moving together? Not really. A couple are pumping here and there, mostly things in the trenches, maybe hype. Dow did for a little while. There's a difference between a real market shift and a candle designed to make you do something stupid. If this truly connects us right to DeFi, and DeFi, this mistake isn't always buying the wrong coin. Sometimes the mistake can just be forcing a strategy before the environment supports it. You enter into concentrated liquidity during high volatility. You chase a high APR pool with a weak token exposure that you don't believe in. You ignore impermanent loss because the dashboard looks exciting. You love seeing 400% APR, but you're not looking at your P&L. A bull can show 80%, 120, 160% APR, 400% APR. You can still be in a bad position. If the token pair is moving against you, you can still lose capital. APR might get your attention, but realize P&L tells you the truth. It's just the same trading leverage. So look, with DeFi, a beginner sees 120% APR. Great, I'm earning 120%. An operator like myself would ask, what's the token exposure? What is the volatility? Is this APR from real freeze or temporary emissions? What happens if the reward token dumps? What happens if price leaves my range? Do I believe in the assets or the reward token? There's so many different questions you have to ask yourself. That's why you have to be an operator to achieve success in this place. So This is the kind of thing I tend to break down more regularly inside dadsdefispace.org, and consider joining our free Telegram group because I'm not going to give you hot calls or guarantees, but just my market analysis and positioning. So, what I'm watching right now and how I'm thinking through this risk and how I'm trying to stay positioned. If you watched previous videos, you know that I'm net short. And remember, if this is helping you think more clearly, hit that like and subscribe button so this channel can reach more people trying to survive the bear market with a real plan. So here's a big one. In crypto, doing more does not always mean doing better. And I struggle with this one because I constantly want to do new things and learn new things. But more trades don't mean better execution, and more LP positions don't mean better yield. More tokens does not mean better diversification, and more charts doesn't mean better decisions. Sometimes the best move out here is actually boring. So keep cash ready, right? Have dry powder on the side. Size down during market bullishness and wait for structure before making decisions. Study the protocols that you're invested in, even if they're meme tokens. Study the community. Clean up your watch list, review your mistakes. You build your conviction slowly in this market. Now, here's the thing what we just discussed, that's purpose. That's being an operator. But see, pleasure, that dopamine that you crave so much, it says do something now. But purpose is saying do the right thing when it actually matters. And without a plan, that market is going to become your boss and control your emotions like a puppet. Trust me, the market is a terrible boss. So when the real move happens, it usually feels obvious in hindsight. But before it happens, you tend to feel uncomfortable. You may be a little lonely because no one's going to be listening to you. The herd always does what the herd does. So Bitcoin may be stuck completely under resistance. It may look weak. Altcoins may be bleeding. DeFi, TVL could even be quiet, which it is right now. Sentiment may be dead, or is it? That is usually when preparation matters most. For the move, you really need to know what assets do I care about, what invalidates my thesis, where am I willing to add, and where am I willing to be wrong? What DeFi strategies are actually worth using, and how much risk are you willing to take in the market? Because once the market starts moving fast, those emotions get louder and louder. And if you don't have a plan, you're probably going to borrow someone else's conviction or invest in assets you don't have conviction in. That is dangerous. So here's my simple framework. These are the 5 reasons I truly believe investors lose before the real move. Number one, they chase too early. They buy before every bounce, before the structure confirms. Two, they oversize their positions too soon. I still am working on this one at times. They go all in before the market proves themselves, or just a little too much before the market proves itself. Number three, they jump from to narrative and they have no conviction. That's a great way to lose your butt in this space. And they confuse APR with profit. They chase yield without understanding the token risk, impermanent loss, range management, emissions, or they don't understand how to trade futures and they over leverage themselves and get liquidated. And then five, they quit during the boring phase, which is right now. They abandon their process right before patience matters most. Look, the edge is built before the move. The move just reveals who was actually prepared. Are you actually prepared? That's what I want you to ask yourself after you watch this video. So remember, most people want the reward without waiting, but crypto doesn't work like that. In fact, very little of investing works like that. Waiting phase is the filter. It filters out the over leverage, it filters out the impatience, and it filters out people who need every single candle to validate their feelings. It filters out those people who are confused with being active or being effective and think that they're the same thing. They're not. The real move usually does not reward the loudest. It only rewards the person who protected their capital, kept learning, kept building, avoiding those fake breakouts, and understood that the yield and your P&L, it's not free. You had a plan and you showed up before that green candle, and that's why you won. So if you want the real-time version of how I'm thinking through all these setups, join the free Telegram group. That's where I post more of my market thoughts, DeFi positioning, and what I'm watching day to day. And if you let me know in the comments, are you staying patient right now? Are you finding yourself forcing trades and positions? Remember, process over prediction, risk before your reward. And this is educational only, not financial advice. Always manage that risk. Go touch some grass. Till next time, ladies and gentlemen. Peace.